Hey everyone, Bitcoin and altcoins have been sliding steadily for the last 6 weeks. There weren't really any fundamental reasons, at least not the ones people were looking for. Then the war broke out. The US, together with Israel, attacked Iran, and in that situation, crypto actually held up pretty well. We've recently heard there might be reason for hope again. Whether this could end soon, how Bitcoin and altcoins might react in the near term, and how you should position yourself. I'm talking about that over the next few minutes with Oliver Michel from tokentus. Great to have you here. Hi. Now the big question, of course, and we were already talking about it last night in our channel, our Crypto Insights channel, is whether this war could be over quickly. There were some signs, and we'll get to that in a second. But first, let's talk about the two big things that really drove the market this past week. On the one hand, oil prices jumped hard. North Sea Brent was up 30% in a week. And last week, we also got absolutely terrible numbers out of the US job market. If you put all of that together, crypto actually held up pretty well, while stocks took some real hits, right?
Yeah, Johannes, exactly like you said. The US indexes kept correcting a bit, which is what we wanted in the sense that it gives crypto more time to recover and catch up. And our crypto stayed steady despite all the back and forth in the headlines. So overall, it was pretty solid and actually quite a success.
If we look at the whole setup a bit closer, especially with the FedWatch tool in mind, meaning what the market expects from the Fed on the path of rate cuts, then at least one thing, inflation from higher oil prices, kind of plays into Jerome Powell's hands for holding off on cuts. Oil has been a big factor. Like I said, we were above $100 a barrel, WTI Brent up 30% in a week. That's a pretty huge move. But oil isn't the only issue the Fed has to deal with. Last week's labor market data was awful too. That combo is basically keeping the whole market on edge right now, isn't it?
Yeah, pretty much the entire week was all about those two things, oil prices and the jobs data. And oil's been building for a while. It didn't just jump in 1 week. Since the start of the year, it's up 58%. That's a big deal. And last week we talked about what it means when oil rises that hard. The risk is inflation because we know gas goes up, shipping costs go up, production costs go up because oil is also an input. So products get more expensive and that naturally pushes inflation higher. But on the other hand, Joanna, it's also clear that when that happens, it slows down economic growth. And those are basically the two things the Fed watches, namely price stability and overall economic stability, meaning a stable job market. And on inflation, the CPI and PCE numbers we got over the last few weeks have all ticked up a bit. Even though Trueflation said yesterday we're at 0.98%, still well below the Fed's 2% target. So basically, there are two ways to look at the same thing, but overall you could say inflation is in range. But on the other side, like you said up top, Friday's jobs report was brutally bad, basically catastrophic. Not that we haven't been expecting this for weeks and months, but it's getting clearer month after month. Unemployment is rising. Markets expected 4.3, we got 4.4, but what was even worse was the number of new jobs. Last month, for January, we were still looking for 130,000 new jobs. For February, it was 58,000, and we got minus 92,000. And what really blew the whole thing up was the December revision. They revised it by 48,000 jobs down to minus 17,000. And as you'll see in a second, that combo, the Strait of Hormuz might get shut down and become impassable. Oil keeps climbing to insane highs, and the labor numbers are just awful. That really set a pretty negative tone last Thursday and Friday.
I still remember when we talked about the December non-farm payrolls, when it actually didn't look that bad and people were saying, well, at least some jobs were still being added. But if that gets revised from jobs added to jobs lost, then going into the latest US labor numbers, it suddenly looks terrible. You just couldn't really see that coming back in December. And yeah, what we're looking at right now is a real sword hanging over us. And like I said, the Fed has to watch both sides. On the one hand, they've got to keep the economy fairly steady, make sure prices are stable, keep inflation under control, and the job market should hold up too. Normally, the Fed has tools, and when it turns one knob, one side of the scale moves and the other reacts. But right now, both are moving the wrong way. The labor market looks awful, the economy is slowing down, inflation is climbing, meaning prices are rising, and that mix is anything but good. Are there any classic examples how the Fed has handled a setup like this in the past, or anything we can learn from it?
Yeah, exactly like you're saying. That dual mandate the Fed has, where on one side it's supposed to keep prices stable, and on the other side it's supposed to keep the job market stable. So those are the two sides of this seesaw. And its main tool is the interest rate lever, and we can see right now it's focused on inflation. It wants to fight inflation, and it does that by either holding rates steady or hiking them. And the market figures, we won't get a rate cut next week or in the months after that, and only one cut this year in September. That's a pretty thin payoff. On the other hand, to keep the labor market stable and the economy strong, rates would really need to come down. And like you said, both are moving the wrong way. Inflation is going up and the economy is slowing down. So I looked back a bit. How did the Fed act in the past when oil prices jumped hard? Normally, it's pretty clear what they should do. If oil prices rise and stoke inflation, you hold rates steady. And they did this a lot in the past, like in the 70s when we had car-free Sundays. Some of you might still remember.
That one.
Yeah, that one, yeah. Yeah. Back then they raised rates, but there were two times they did the opposite. In 1991, when the Gulf War broke out, oil jumped 100% in no time, basically doubled. And during the 2007-2008 financial crisis, we had about a 50% run-up in oil too. And there again, the Fed had to decide, damn it, what do I do? Inflation could spike because of oil. Do I keep rates steady or even hike them? Or thinking back to the financial crisis, do I need to support the economy? What do I focus on now? Where do I put my focus? And in both cases, she did the same thing. She basically brushed inflation and the risk of inflation aside and tried to prop up the economy, help it get back on its feet by cutting rates, cutting them hard. In 2008, that looked like going from, I think, 4.2, 4.5% down to 0.25% within a year. And I can imagine and kind of secretly hope that the Fed does it again and says, I've got two problems, but I can only fix one, and I'm choosing the economy and cutting rates. Unlike what we're still seeing right now in FedWatch. And maybe the new Fed chair is exactly the guy to turn the ship that way, and maybe the Fed gets a little extra fuel this week because on Wednesday we get CPI again, and on Friday we get PCE again, and we've also got the GDP, gross domestic product. The first one was for Q4. 2025 was a disaster.
Yeah.
Just 1.4% growth compared to 4.4 the quarter before. And now it'll be interesting to see whether that 1.4 gets confirmed, maybe improves, or even worse, gets revised down. And yeah, that's really the big takeaway here. With what's been happening with oil prices these days, there are examples where the Fed suddenly acted totally differently than it had for months. And that's exactly what needs to happen now. And it's not just me saying it. A lot of economists in the US say the Fed is already pretty far behind. It needs to finally turn the ship and do something. Cut rates.
In the past, in the 90s, or even during the financial crisis, it definitely wasn't like a Fed chair who was about to leave office was gearing up for a showdown with the US president. Sure, Jerome Powell could still dig in and stick to his stance. We'll see. But besides the inflation numbers, the big topic this week was the war in the Middle East. Israel and the US launched strikes, there were retaliations, it kept going, and last night there was a small glimmer of hope. If you look at the US indexes during this war week, you saw the hits, of course. But like people always say, political markets have short legs, and it bounced back pretty fast.
Yeah, that's exactly it. Here's our usual picture with the Dow, S&P, and NASDAQ on the daily chart. If you look at the Dow, it's exactly what you were talking about. This green candle here is yesterday, Monday. It rebounded like crazy because Donald Trump said that for him, the Iran conflict is, he says, but his defense secretary said something totally different, and we'll circle back to that at the very end. So on Monday, all three bounced back really fast, pretty much in sync. If you look at Friday's candle, you see how hard it dropped on those jobs numbers. And Thursday's candle made it clear. Oil just kept climbing and climbing. The Strait of Hormuz is closed. We've got a problem. So yeah, you can say the big US indexes had a nice pullback last week. That's what we wanted because they were pretty stretched, and we know there could still be one last push higher. And if that starts too high, yeah, then it might drop too fast on us. So a little runway, that pullback was fine. They're all still within striking distance. You can see it here. That's the last higher low. So overall, it all lines up pretty well. The Dow corrected the most, fell the most, and the S&P was second. And what I actually liked here is the NASDAQ, which is super important for us and for crypto. You can see it clearly. Tech held up better than the other two. I'd like to see, and I've said this in the last 3 or 4 interviews, this area here, of course, can't break below that level. That's obvious. But this zone here would be really nice. If it dips just a little more, that's fine too. But if it heads higher from here, that works as well. That would be the signal for our cryptos to come along, because the NASDAQ matters just as much as the Russell. So how much of a pull can the US indexes create for crypto? Same question as last week. And with the pullback this week, while Bitcoin just moved sideways, our other cryptos actually showed some strength and bought a little time. They dipped back. Bitcoin stayed about the same. The gap has narrowed. So I think there's a good chance they sync up on the next leg higher.
We'll look at Bitcoin again in a second, but first let's zoom in on the Russell 2000. It reacted a lot more sensitively to the oil price shock we saw last week, which has really been building since the start of the year, but it spiked hard last week because of that strait you mentioned. The Russell corrected more, but even here we got a green candle in yesterday's session.
Yeah, the Russell is packed with the smaller, more sensitive names. The big names usually have billions in the bank. And they're not as dependent on these swings. You can see it really clearly here. That was the start, that vertical line for the Iran conflict, how the Russell got hit and how much volatility it showed. Minus 2%, minus 2%, minus 2%. And yesterday morning, or really overnight, when the Russell opened, it was down 4% in the whole. You're sitting there thinking, oh man, what are we in for today? And then during the day with this, I'd say pretty all clear message from Trump. Basically, I'm done with the Iranians now. I took care of it. It's all handled. Huge success. We saved the world. It flipped from -4% during the day to plus 1.2%. That just shows how fast this stuff can move on headlines. When everything's that jittery and nervous, it swings fast one way, then fast the other. And you can see it really clearly here. But overall, I'd say that was the first move, that was the second move. We've got the higher low here. And to me, that's the final push higher back toward the all-time highs, which hopefully the Russell hits along with our cryptos.
With the Russell, we see volatility is a lot higher than in the other big US indices. You just explained why, but with oil rising and oil being priced in dollars, dollar strength matters a lot too. And we track that with the DXY. We'd already dropped quite a bit, got into the target zone you mentioned, and then it bounced back up. Do you think the dollar keeps strengthening? Because that would work against a real crypto recovery.
Yeah, you're basically right. We were hoping the DXY would get into that target range between 96 and 97. And it did, even dipped a bit below it, which was great. And then it was clear it would move back up. But this upswing is still in a zone where it's not really hurting our cryptos as a competing investment. You can see it really clearly here too. That vertical line marks the start of the conflict and how the dollar shot up. Like we said last week, people ran to liquid assets, basically the US dollar. And ever since things have calmed down a bit, the dollar's been mostly moving sideways. We've been wondering for a while, does it take another dip or was that it? But given what's going on with the US rebuilding its position globally and the petrodollar, I'm assuming this keeps pushing higher. And yeah, of course that becomes competition for our crypto, but overall, the direction is up. Good for anyone running their portfolio in dollars. That also improves the rate versus the euro, and then at least you've made back 1% or 2%.
Let's look at Bitcoin, and we'll keep an eye on whether a strong dollar is really the main competition for it. You might have thought, especially with the Iran war that's been brewing for a while, but then with the US stepping in, that Bitcoin would drop a lot more. Sure, we saw it fall below the purple line. And like you said, technically, that means it moved into the currency market. But overall, it had already been sliding hard for 6 weeks. And now during this total escalation, it could have corrected even more. So how does it make sense that something that's supposed to be pretty risky is staying kind of stable in a scenario like this?
Yeah, well, a coin like that isn't tied to oil. Simple as that.
But the risk is still in the market.
Yeah, but once a blockchain is up and running and a coin sits on top of it, you're not dependent on any sales, any oil, or any products that get more expensive as oil goes up. Sure, there's still some dependence on global factors like liquidity flowing into the market and maybe not into crypto, but that's definitely one reason the Russell got hit so hard, like we said, while our cryptos, as you can see here, have basically been moving sideways pretty steadily since that run to 60,000. Of course, it still picks up some bad news, like the jobs numbers. When the economy's struggling, money gets pulled out, including out of crypto. That hits everything. But overall, we've had a nice sideways move now for a few weeks. Since the start of February, so about a month. And yeah, it's basically what I said last week. Right now, we're in this range. And we've chewed on that enough over the last 2.5 years, just like we had here. It goes up, it goes down, it moves left, it moves right. The market makers play their game. And honestly, that's about the main takeaway from this chart. Right now, we're in a bottoming phase. Are we putting in a bottom here that we can bounce up from again? Because the overall trend is still positive, even if I'm saying it loud and clear. Right now, we're in a bear market. Yeah, still, I kind of put a question mark and an exclamation point on it because personally I still don't really buy that. This was the bear market. But overall, that's what it looks like. We broke the higher highs and higher lows pattern. We tested 60,000 and now a bottom is forming. I can only say it again, even though we popped back over 70,000 today, we need to see more and more green candles here, more green candles than we had on the way down. I mean, sure, it can go up from here. That relief rally I keep talking about, and I do think it's coming. Yeah, then the CME gaps get filled, then we take out the SMA 1500, and then we move into the retracements. From there, it can bounce back down again every time. Relief rally's over, the rebound's over, and we keep correcting. Or we get a continuation rally instead. Depending on the overall backdrop, I still think that's totally possible. But there's also the scenario where we tap 60 again. And there's the scenario where we drop back into the high 50s and then push up from there. The scenario where we drop straight from here to 30, 25 or 20,000 bucks. I think at this stage, it's possible but very unlikely. So for me, there are basically three bullish paths. Either we go right back above 60, or we dip into the high 50s and then head into that relief rally with the targets mapped out here. And we can get rejected at different levels, all the way up to around 111. And if we can hit 111, 112,000, then maybe it keeps running into a continuation rally. And then our targets around 140 to 150K might still be doable, but that's really looking pretty far out right now. The key takeaway is we're in a bottoming phase and you've got to give that time. This isn't a weekend thing. It can take a few weeks. And from there, we'll see how it plays out. We've got a pretty solid tailwind. On the spot, Bitcoin ETF. The week before last, we had a really strong inflow, and last week we saw 1.2B in inflows on Monday, Tuesday, and Wednesday, then Thursday and Friday. An outflow of 600 malers, so net, about 600 malers inflow. That's pretty solid. And I can only tell everyone, we see it in our Telegram channel. The questions keep coming and people are getting pretty on edge. If this back and forth, these green candles that are usually like 3, 4, 5% moves, gets to you, it rips up and you're pumped thinking, okay, we did it this morning over 170, and then you get a few red candles that drag it back down. If your nerves can't take it and you want to tune it out, my advice is switch from the daily chart to the weekly chart, because it looks a lot calmer and you can approach it with a different time horizon. But overall, things look pretty good. We're down 52% right now. We're bottoming. We know the different paths higher, where they can top out and how it could continue. Now we just let it play out. And in the end, we'll see whether this really was a bear market.
I was just about to say that. So even if you feel like you need to rinse your mouth out, just saying bear market, since you brought up 25 and 30,000 bucks, you still think Bitcoin can hit those low levels? Not now, but later?
Yeah, so this is here. Basically it basing out. Then we get a relief rally and then back down, or it pushes up in a continuation rally to the 140 target and then back down, and then down here, in my view, along with the US indexes rolling over too, we'll put in another bottom. And that to me is the real final bottom, and it's going to hurt.
Let's zoom out a bit and look at Bitcoin on the weekly chart. We had 6 red weeks, 6 straight red weeks. In the last interview, we already talked about how rare it is to have that many. Down weeks in a row. Last week was super thin, but it was green, a positive week. And like you said, you can definitely feel the nerves, and it makes sense. Everybody's hoping it finally turns up. Could this little mini light green week maybe be the first sign of that relief rally?
Yeah, I'd love to say yes. But like I said, if you're looking at it on the weekly, you just have to wait week after week after week. And what you see here is the second to last candle. That's what they call an inverted hammer. That's actually a pretty typical reversal candle right here. And that far right green candle, that's this week. So what we were hoping for last week, that it'd close green, happened, even if just barely. And maybe we can tack on another green candle this week. And you can see the RSI slowly starting to move up again, like it did here. That was actually the lowest level the relative strength index has ever hit. Even lower than the low in the last bear market. So yeah, it could totally be that this was the low, that this was the bottom, and that from here we start moving higher. And if you look at the whole move from here, since this was the base of this whole run, then as long as it stays positive, to me it's still positive overall. And then you've just got a correction in the middle. Sure, it's 52%, and for altcoins 60-70%, but maybe it's just a mid-cycle correction. For anyone who thinks I'm being too upbeat, yeah, sure. There are people who'd rather see it drop so they can buy at the bottom, but I just think with what's going on, especially in the US, and we'll look at that at the end, we're definitely going to see a solid relief rally. And in that relief rally, the altcoins, in my opinion, are going to perform. So if you look at this chart here, basically since mid to late, that's October 22. It's been trending up. We've had a 52% correction. Yeah, maybe we dipped to 60, but that's still within that second 50%, maybe even 57, 58. But I still think we're going to see this move here. If it's just a relief rally, fine, then it'll fizzle out before that. But if we roll into a continuation rally, we've still got a bit more upside. I've brought up this broadening wedge a few times now, so there are chart patterns that back it up. And now we just have to see. I think the bounce is already underway, just based on the RSI alone. As for forming a bottom, like I said, we've got to give that time. Last time it took a while too. That's not a days kind of thing. We've got to see how liquidity starts to kick in now, because the Fed really only got going in December, and it takes time for that money to actually hit the market. We've seen the rotation. I think gold and silver hit new all-time highs, and maybe some of that rotated over toward our cryptos. Hopefully the US indexes go into their final leg, and when US indexes move up, they create a certain euphoria. That euphoria makes liquidity flood into the market, and people start asking, where else can I park my money? And then you end up looking at crypto. Also the PMI, like we talked about, has been back above 50 for the second month now, which is great. And of course the last big push from the US government matters too. When do we finally get legal clarity, and when do we see the first big real use cases? NASDAQ is going 24/7 now together with Kraken. So yeah, a lot's happening, and that's all tailwind. That could really push crypto. So whether that was the top of this bull market, we'll know in 2, 3, 4 months, depending on how this shakes out. We've got time, and we'll keep doing our interviews either way.
And then
keep watching.
Let's look at the altcoins. If Bitcoin stays stuck moving sideways, the altcoins will probably do the same. So you can't really expect some huge breakout then, right? Oder?
Exactly. That's why I've got both up here side by side. ES and XRP, our two big ones after Bitcoin. And like you said, if Bitcoin just chops sideways, they do too. You can see it really clearly here. This is the range on ES, and this is the range on XRP. So nothing special going on there right now. Yeah, we've got to keep an eye on it. Last time I said if Bitcoin drops, we need to make sure we're limiting the damage here. If Bitcoin goes sideways, they go sideways too. And if Bitcoin goes up, then of course we look at how strongly they can move up relative to Bitcoin. And there's one thing I find interesting that I want to quickly point out again. On both of them, I drew in this line. That's Bitcoin's all-time high. That was on 10/6. That was the 6th of October, right here at this spot. Usually when Bitcoin prints an all-time high, the altcoins either start running already on the way up, or they follow with a bit of a delay and print their highs after Bitcoin. So the classic altcoin rally always kicks in a little later than the top, because money rotates out of Bitcoin and into alts when people want to grab those gains. You don't see that here. There's no rally. Nothing there. And same thing here too. The moment Bitcoin topped out and dropped, they dropped right along with it. Yeah.
But some people say, well, the asset class is still too young to assume it'll always behave like it did in the past. Some folks, like here at Crypto Insights, also say, this time it's different. You've said that too. Maybe it just doesn't happen this time.
Maybe the bull market isn't over yet. That's basically what I think, because both of them did print all-time highs, but clearly way before Bitcoin did. Meaning an all-time high got made not some crazy breakout with an extension, but more like the 2021 all-time high got confirmed here and here. So with that in mind, what happened here and how the altcoins behaved relative to Bitcoin, compared to all the cycles we've had before, you have to say, this is totally atypical. Could be we've got new setups now that we'll have to adjust to in the next cycles. But the fact that Bitcoin hit an all-time high and the altcoins did basically nothing, neither before nor after, nothing that really crushed it, except retesting old all-time highs, tells me something's missing. This cycle isn't complete. So I still expect that now, in the relief rally, in Bitcoin's relief rally at least, altcoins will rip higher. And just to be super clear, when I say altcoin rally, I don't mean every altcoin, because we've got millions of them now. I mean the big altcoins with real utility and the big meme coins. Those stick around. They will definitely run along in an altcoin rally. That's not even a question, but only a few. Not all the junk that's trailing behind.
Do I spot those just by market cap or by actual use case? How do I filter them out? Like, what's trash and what's built to last?
What tends to last are the ones with utility, meaning there's a real business case behind them. And if you take stable coins out, you can assume the top 15 to 20 on CoinMarketCap are definitely relevant, will survive the next bear market, and will probably run when the altcoin rally kicks off. And then there are obviously interesting categories, like the AI category. And in these categories, there are always one or two that lead the pack by market cap. And those will definitely make it through in the key categories and join the altcoin rally. But because there are just so many altcoins, the money flowing in won't spread evenly and lift them all. It'll go very selectively into just a handful, and those will basically be the altcoin rally, in my opinion.
You just said there's still something missing here with the Bitcoin hype, namely the altcoin rally. And I'm sure viewers have also been thinking in the last few interviews that something's missing too, the roadmap. But when you look at the roadmap that points the direction, like you said, sure, the timing is a whole different story, but as long as it's still coming, you can stick to that roadmap and it's not too late. This time you brought it back again and have also, with the roadmap, to our cameraman Stefan Schwenk's delight, you finally changed something on it. What was it?
Yeah, honestly, not that much. I changed the date. I just want to remind everyone again. We kicked off the roadmap on 05/27/25 with the idea, because people were asking, why not write down the targets you guys have? Then we pulled together all the goals we'd already put out 6 months earlier onto this page for the first time. And that page is now almost a year old now. And if you include the 6 months before that, you can assume what's written here is about a year and a half old, and that's roughly 10% of the whole crypto market timeline. So this is stuff we wrote into our game plan a long, long time ago. And sure, a lot has happened since then, but relatively speaking, I think we're doing pretty well, especially when it comes to the US indices. I think we're talking about the final all-time heist here. I don't need to say that again. Those are the yellow items, they're still open. I just want to point out again, we're currently in what I consider the final correction before the final leg into the final all-time heist. We've checked off the X2 I-96. Personally, I still haven't dared to flip gold and silver to green, meaning the all-time heist levels are basically reached there for now, and then it's consolidation for a while, either sideways or down. The second thing we definitely hit was Bitcoin's move up to 126. We really carried that cleanly all the way to the top. I assumed it would keep going and not slip into this kind of bear market style phase. We haven't printed another higher low, so that box isn't checked. I'm still personally pretty optimistic about a continuation rally with 140 to 150 still as my target. There's a chance, definitely smaller than for a relief rally, but I still see it if the surrounding conditions line up. Dominance has already dropped in the first step, like we talked about, and otherwise, the third area, basically the whole altcoin and meme coin world, hasn't really been touched yet. Same thing here. I still stand by these targets. As long as we get into the continuation range and reach roughly that kind of scale. All locked in a year and a half ago. In that year and a half, plenty of YouTubers and influencers have changed their minds more than once. We couldn't, because our take's been written down here for a solid year. And what we also marked in green, which I'm still kind of reluctant to accept, is that we've entered a bear market.
We could have made it way more yellow.
Yeah, but look, there are people saying we're in a bear market. So fine, they can have their green because I said we're heading into a bear market. We're down 52%. I said 60 at one point, so I'm pretty close. On the alts, I think ETH corrected just under 70%, and at 90, we're not that far off. So if you want to be fair, you have to say, okay, he called the bear market and basically nailed the scale. It's just not the bear market I meant.
Later, 25,
Dollars. If we get a rollover here, if that drops and Bitcoin drops with it, then we're heading into the real bear market. I still think there's a decent chance of that setup. Like I said, that's just my personal opinion. Based on what we're showing here, everyone can piece together their own approach and do what they think makes sense. Yeah, what else did we do? The model portfolio. We were at a peak of 341%, 50% Bitcoin, 25% ETH, 25% XRP, a totally defensive setup starting in June 24. We're now up 126%, tax-free. Compared to the last update 3 weeks ago, it's only moved by 1%. And I'm curious what number will be sitting here if we look again in 2 months, 3 months. We'll see, since we'll keep tracking it regularly.
Like you said, this isn't investment advice. It's your personal game plan that we go through here week by week, or sometimes every 2 or 3 weeks, but we always check in you still expect the US indexes to put in a final all-time high. For Bitcoin, you're looking at least a relief rally, maybe even a continuation rally. And for altcoins, you expect a lot more punch on the upside. But of course, that needs a push. We said up front we'd talk again about the US government, and that means Donald Trump too. And we can't forget, the midterms are this year. Trump wants to be seen as the peace president. Trump wants to keep inflation under control. And basically, he needs to get all these points sorted in a voter-friendly way by the midterms in November at the latest. He's still got some homework to do. Could that homework be the push from the US government that lines up with your expectations?
Yeah, I think the one that has to give us the biggest tailwind for everything I just laid out is the US government. I don't want to pin it all on Donald Trump alone because he's got a whole team advising him. So I'd rather say the Trump administration or the US administration. I also want to touch on that contradiction again. I think we'll see rallies both in the US indexes and in our crypto before it heads lower. And the US government's job, in my view, the most they can still squeeze out of this situation is this sinking US ship, which we really basically listed out on checklists, why there are already holes in the hull, water's coming in, and the ship is pretty much already sinking. They need to try to keep it afloat as long as possible. Why? What you need to know is this: the share of US household wealth in stocks and crypto is at an all-time high, around 45%, meaning 45% of US household savings is invested in stocks and crypto. That means about 65 to 70% of households in the US own stocks and/or crypto. In Germany, it's more like 22 to 25, so Germany is way behind on that. What does that mean the other way around? When Americans ask themselves, am I doing well? Can I afford stuff? Can I cash out somewhere? Can I turn a stock into cash and buy something? They mostly look at where their stocks are and where their crypto is. That matters. For the US government, that's basically a key gauge of how happy people are. If stocks drop, if crypto drops, then Americans feel poor, running out of cash, and that means the government that let it get this far basically has a problem. Now, here's the thing. The midterms are coming up, like you said, and right now it looks like this. Since the Iran conflict kicked off, things have gotten a lot worse for the Republicans, Trump's party. Democrats have about a 47% chance to take the Senate. That means...
Based on the current tallies, like the poly market numbers.
Yeah, exactly, according to the betting markets. And you've got to remember, Congress has two chambers, the Senate and the House. And it's even more dramatic here. Democrats have about an 85% chance to win the House. So, at the end of the day, the voters decide, and when it hits voters in their own pocketbooks, it doesn't matter how emotional Trump sounds or what he promises. When push comes to shove, they look at their wallet, their bank balance, and realize there's nothing there. And who do they blame? The Trump administration, and that's why they vote them out. And then he could lose both chambers, and if he loses both, he basically can't get much done in the last 2 years of his term, other than just being there. So the Trump administration has to deliver now. They've got to deliver and do something for the economy, because the economy shows up in stock prices and crypto prices, meaning he has to pump money into the economy. He keeps talking about stimulus, those $2,000. People assume taxes will be cut. and Americans will be filing soon, and there's supposed to be a huge tax break. That money can obviously flow back in, like you see here with what the Americans are doing with it, and get invested in crypto and stocks. Basically, half the capital goes right back in once they get something. That's one piece. And he definitely has to end the Iran war, and that's exactly what's happening right now. We made the slide yesterday, and literally while we were writing it, the headline hit. Trump stepped up and said this whole thing is basically already over. Whether that's true or not doesn't matter at all. If they keep going down there another 2, 3, 4, 5 weeks, nobody cares anymore. He just throws that line out there and says, all right, it's over for now, and I don't think he's ending the Iran war. Because he's actually done down there and everything's handled. He's ending it because
he needs to end it.
Yeah, because he has to end it. So basically things like these numbers don't come out. And then of course there's the Clarity Act. He's got to push. He even dropped a post last week that really cranked the pressure on the banks again. He wants it now because he knows if the Clarity Act doesn't happen, he's lost the whole crypto community, because he talks such a big game about Bitcoin and making it the world capital for crypto, and then he can't even get the Clarity Act through. A lot of people will say, stocks and crypto, he left us hanging, and then he'll lose them. So yeah, he has to be. As aggressive on this as he's been, like going after Iran or Venezuela, or maybe wanting to go to Cuba, and whatever else he's tackling so hard, he's got to go after stuff like the Clarity Act just as hard, and there's a massive amount of money behind the Clarity Act. And on the roadmap, we've got this term FOMO. In the past, fear of missing out was mostly about retail, the regular small investor who wants to jump in at the very end. I think in the last big leg up for Bitcoin and crypto, FOMO will mostly hit the institutions because they haven't really been in at scale yet. With the Clarity Act, they can invest in a regulated market, and then they'll say, before everyone else gets in, I need to get in now. So, because of that, the US government, the Trump administration, has to work hard over the next weeks and months, do something on the economy that helps our crypto and stocks, do some kind of stimulus that helps again get something done on the Clarity Act, and of course make sure the Fed keeps pumping a lot of liquidity into the market. And it'd be great, like I said at the start, and that's the full circle, if they could cut rates. If rates got cut next week for whatever reason, I mean for some unfathomable reason, I mean we do know the reasons, then everything would shoot up immediately.
Okay, and if it's not next week, then May is still the key focus, with a new Fed chair stepping into the role.
Or maybe at the press conference afterward they'll say, okay, things have changed. We're thinking that for the next meeting we'll switch course. Honestly, one good press conference can be enough. But I don't think liquidity alone does the trick. In my personal view, the Fed also needs to, with everything we've seen lately, looking at our checklist of where Americans are struggling, the Fed also needs to step in on rates.
So the US government still has a lot of homework to get through. The midterms are in November, and the market and, like you said, US households and people expect something to actually happen. We're watching everything that matters, Oliver. Thanks a lot for now, and we'll see you again on Tuesday. And for you at home, we've got everything coming up this week on our radar, whether it's US economic data, oil prices, and of course the geopolitical situation, which we hope will calm down further soon. Thanks for watching.